Welcome, curious minds, to the deep dive. Today, we're taking a shortcut, really, to getting properly informed about a pretty significant player in healthcare, Narayana Hrudayalaya Ltd. They've just put out their financial results. This is for the first quarter of their fiscal year 2026, so that covers up to June 30, 2025. And we've got, well, quite a bit to dig into here. Their investor presentation, the formal board meeting stuff, and the press release. Our mission, as always, is to pull out the really important bits of knowledge and insight. You get the key facts, the clear explanations, hopefully without feeling buried in numbers. Think of it as kind of uncovering their blueprint, balancing that rapid expansion with high-quality, digitally enabled care.
Exactly. And we're going beyond just the headlines, trying to understand the underlying trends, the strategic moves shaping where they're headed. We'll look at the big picture, their financial health. We'll zero in on operational successes, their pretty ambitious expansion plans, digital transformation, and even touch on their commitment to a broader vision for, well, health and society.
Okay, let's unpack this blueprint then. Looking at the core financial performance first, what immediately sort of jumps out from these latest reports?
Well, what's really fascinating is the momentum. Narayana Hrudayalaya reported consolidated operating revenues of $15,073 million for Q1 FY26.
Okay.
And this isn't just growth. It's a really robust 15.4% year-over-year increase, plus a solid 2.2% quarter-over-quarter bump. This kind of consistent double-digit growth, especially in India's market, which is pretty competitive, it suggests strong penetration, successful execution.
Right.
It's a key sign they're capturing that increasing patient demand.
That revenue growth is certainly impressive. How does that translate into their profitability? What are we seeing there?
Okay, so consolidated EBITDA, that's earnings before interest, taxes, depreciation, and amortization, basically a key measure of operational profit. It reached 3,607 milliliters. Now, that's a healthy 10.7% year-over-year growth.
Yeah.
Though, interestingly, there was a slight dip of 6.2% compared to the previous quarter.
Yep. Yeah.
Their EBITDA margin stood at 23.9%.
And 23.9%. Is that good for the sector?
Oh, yeah. That's quite healthy for healthcare, especially for a company that's investing so much in expansion. It points to strong operational efficiency. They're generating solid profits from their core services before you factor in things like interest and taxes.
So strong operational profit. What does this mean for the ultimate bottom line, the net profit after everything?
Right. The consolidated PION, profit after tax, that came in at 1,961 mebanite, giving a margin of 13.0%.
Okay.
Now, it's worth noting this was actually a 2.3% decrease compared to the same quarter last year.
Oh, interesting.
But a tiny 0.1% increase from the previous quarter.
So a slight year-over-year dip in PAT, even with that strong revenue and EBITDA growth. Why might that be?
It's an interesting divergence, isn't it? It suggests that while the core operations are humming along, there might be increased appreciation kicking in from all the new assets, or perhaps higher interest costs linked to their capital spending.
Makes sense.
Or even changes in tax provisions. It's something to keep an eye on, but not necessarily a red flag given their whole growth strategy.
Okay. And given that investment, that expansion, let's dig into their balance sheet a bit. How's their financial flexibility looking? Specifically, their debt situation.
Yeah, this is quite remarkable. Their net debt to equity ratio as of June 30th was incredibly low at 0.09.
0.09.
Wow, exactly. Total borrowings minus all their cash, bank balances, investments.
Yeah.
Came to just 3,430 milliliters.
Yeah.
In an industry like healthcare, which needs so much capital, a ratio that low signals exceptional financial prudence.
Right.
It gives them significant headroom for future borrowing if they, want to accelerate growth even more. Speaks volumes about their stability.
Now, Dr. Emmanuel Rupert, the MD and group CEO, he commented on this performance. What was his take? Did he shed any more light?
He certainly did. He highlighted this was their highest ever revenue on a quarterly basis, and that profit margins were sustaining at high levels.
Good to hear.
He put it down to a mix of factors. More patients coming in, improved realizations, basically getting better rates for services.
Okay.
Optimized payer categories, so focusing on more profitable patient groups, and positive traction from their integrated care clinics. He also expressed confidence in steady growth from their Cayman business and continued strong performance from that integrated care side. Sounds like a holistic approach.
It definitely sounds like they're growing across the board. Let's break down where this revenue is actually coming from, geographically speaking. How did their core India operations do?
India operating revenue was 11,326 milliliter for the quarter. That shows solid growth, 7.8% year over year and 2.1% quarter over quarter.
And what's driving that domestic improvement mainly?
It seems to be both increased patient volumes and improved average revenue per occupied bed. So they're attracting more patients and effectively getting more revenue from the services they provide to those patients.
Got it. And their international footprint. Specifically the Cayman Islands, that always seems like a unique focus for an Indian provider.
It is, and it's really paying off. The Cayman operating revenue was 3,968 million.
Okay.
That's a remarkable 48.4% year-over-year growth and 4.5% quarter-over-quarter.
Huge jump.
Massive.
Yeah.
And this explosive pickup is directly linked to the new Kamada Bay Hospital starting operations. It really shows that their strategic investment there is working and becoming a significant revenue driver fast.
Beyond the financials and the footprint, what really shows their commitment is, the clinical side, the actual healthcare excellence. Any groundbreaking procedures or innovations that stood out this quarter?
Absolutely. I mean, beyond the numbers, they're clearly pushing boundaries medically. We saw several specific patient success stories that really highlight their capabilities, like MMI Narayana Hospital in Raipur.
Yeah.
They did their first ever aortic valve-preserving aortic replacement and total arch replacement surgery.
Wow, that sounds incredibly complex.
It is very complex. And then in Guwahati, the super specialty hospital successfully treated a 3-year-old for hepatoblastoma. That's a rare, aggressive liver cancer. And in Bangalore, at the HSR Multi-Speciality Hospital, they performed their first MitraClip procedure. That's a minimally invasive way to treat heart valve problems. These aren't just, small tweaks. They represent significant advancements, showcasing their expertise, especially in complex cases.
And infrastructure too, right? I think I saw something about Kolkata.
Yes. In Kolkata, the Rabindranath Tagore Institute operationalized a new block. They moved oncology daycare beds, dialysis, and installed a pneumatic chute system, which helps move things around the hospital faster. So upgrades on multiple fronts.
These sound like major upgrades. So what's the overall picture of their physical presence now? How many facilities, how many beds across the whole network?
Yeah, it's substantial and growing. As of July 1st, in India, they operate 18 owned or operated hospitals, 2 dedicated heart centers, and 18 clinics and dialysis centers.
Okay.
That adds up to 5,262 operational beds in the hospitals, plus another 132 in the heart centers. Then add the 2 facilities in the Cayman Islands with 169 beds.
So the grand total is?
A grand total of 40 healthcare facilities, 5,563 operational beds, a total capacity of nearly 6,000 beds, 5,924 to be precise, and served by over 4,200 doctors. It's a vast network.
Truly vast. And how are they generating revenue from all these operations? What's the breakdown within India, the business mix?
For their India operations, the main driver is their own hospitals. That accounts for 73% of revenue.
Right.
The hospitals they operate but don't own contribute 25%. And then the heart centers and other ancillary businesses make up the last 2%. So it highlights that their core model really relies on those owned, usually larger hospital facilities.
And who are the patients coming through the doors in India? What does the payer profile tell us?
It's quite diverse. Domestic walk-in patients make up the largest chunk at 47%. That shows a strong direct patient base. Insured patients account for 31%, which definitely highlights the growing role of health insurance in India. Then you have government schemes like CGHS and ESIS, contributing 18%, serving a broader population segment. And finally, 4% comes from international patients, which speaks to their reputation for quality attracting people from abroad.
Considering their history and name, cardiac sciences must be significant. How does that and other specialties break down in terms of revenue contribution?
You're spot on. Cardiac sciences is absolutely their powerhouse. It accounts for a significant 33% of revenue.
A third. Wow.
Yeah. Medicine and GI sciences follow at 16%. Oncology is next at 13%. Renal sciences 9%. Neuroscience is 8%. Orthopedics 5%. And then a mix of others contribute the remaining 17%. That deep specialization in cardiac is definitely a strategic advantage. It often means higher value procedures and a very strong brand in that specific field.
Let's zoom in a bit more on the operational metrics for India, patient activity, efficiency. What do those numbers show?
Okay, patient footfalls, that's both inpatient and outpatient visits combined, were huge. 617,000 for the quarter.
Good.
Their ICU occupied bed days were 53,000, indicating pretty high use of their critical care units. The average length of stay, ALS, was 4.8 days. That's quite efficient for multi-specialty hospitals like these.
And the revenue metrics per patient or per bed?
Right. This is interesting. Average revenue per patient, ARPP, for inpatients, was 148.7 thousand. For outpatients, it was 53,000.
Okay.
But crucially, the average revenue per occupied bed, ARPOB, that's a key efficiency metric, was 17.6 million for Q1 FY26.
And how does that compare?
That's a notable increase from 15.5 million in the same quarter last year, Q1 FY25.
So that ARTOB increase is a strong positive signal then.
Definitely. It shows they're not just filling beds, but they're effectively increasing the revenue generated from each occupied bed, likely through, better mix of cases, maybe pricing adjustments, operational efficiency gains. It all adds up.
They're clearly on an upward path, but growth needs planning. What are their big plans for future expansion, capital expenditure? They mentioned ambitious targets.
Oh, absolutely ambitious. Their vision for the future includes an expansion pipeline targeting over 7,600 beds by the fiscal year 2030.
600 beds.
Yeah, and this isn't just like small additions. It involves significant greenfield projects, building completely new hospitals and brownfield projects, which means expanding or upgrading existing ones. It's a clear commitment to seriously scaling up their operations across India.
Can you give us some concrete examples? Where are these major projects happening?
Sure. For instance, a big greenfield project in HSR, Bangalore, that aims to add 215 beds. The project cost is substantial, 4,900 million, and they're targeting completion by FY28.
Okay.
Another major greenfield is in Rajarhat, Kolkata. That's adding 350 beds for 9,000 million, also slated for FY28. These are huge investments.
Really significant sums.
Definitely. They also have expansions planned in Raipur, adding 300 beds by FY28 for about 5,400 million, and a slightly smaller one in southwest Bangalore, adding 100 beds by FY27 for 840 million. The scale of these really highlights their long-term confidence, though, managing so many large projects at once will be a major undertaking.
No doubt. Now, in today's world, healthcare is becoming increasingly digital. How is Narayana Hrudayalaya using technology? What's their digital transformation looking like?
It looks pretty impressive, actually.
Neat.
Clearly aimed at streamlining things and improving patient care. Get this, 85% of their inpatient documents are now digitized using mobile apps.
85%, that's huge towards paperless.
Exactly, a massive step. And their public-facing app, the NH Patient app, seems to be resonating well. It's crossed 3 million installs overall and has a really high App Store rating, 4.9 out of 5.
Wow, so patients are adopting it.
Seems so. Indicates strong satisfaction with their digital front door, you could say.
Are these innovations also helping the doctors and staff internally?
Definitely. It's not just patient-facing. They've developed a doctor app task manager. Basically helps doctors create, manage, monitor tasks, cuts down on admin burden.
Smart.
And this is quite groundbreaking. They've prototyped an ICU master sheet. The idea is to digitize all that patient monitoring in the ICU. Real-time updates on vitals, lines, tubes.
Is rid of the physical charts.
That's the aim. Eliminate them completely. Imagine the efficiency gains and potentially reducing errors in critical care. These are really smart investments that could lead to tangible benefits in efficiency and patient safety.
Dr. Rupert mentioned integrated care as a growth driver earlier. What exactly does that mean for them and how's it performing?
Yeah, integrated care is a really interesting strategic shift for them. They started this program back in September 2022, initially in some locations in Bengaluru and Hosur. It's about providing a more holistic patient journey, thinking beyond just the hospital visit.
Right, connecting the dots.
Exactly. As of June 30th this year, they have 10 points of presence for this. And in Q1 FY26 alone, they handled nearly 131,000 patient transactions through this integrated care system.
And revenue-wise?
Generated 135.51 million in revenue just in that quarter. It's a clear move towards capturing the patient at multiple points: primary care, diagnostics, maybe follow-ups, fostering longer-term relationships, and of course, creating new revenue streams.
Are they developing new products or services under this integrated care umbrella?
Yes, they're actively innovating there too. On the product side, they piloted their own health insurance called ADD Health Insurance in Mysore.
Oh, interesting. Moving into insurance.
Yeah, and they've since expanded it to Bangalore, Kolkata, Shimoga, and Raipur, so broadening its reach. They also have another plan, Arya Comprehensive Health Insurance in Bangalore, and just launched an ADD Plus plan in Kolkata.
That's a significant move, offering their own insurance.
It is. It allows them to potentially control more of the healthcare value chain, maybe reduce costs, improve access for their patient base. It's a strategic play.
It's really good to see a company that's so focused on business, also highlighting its broader commitments. ESG, environmental, social, governance. What's their vision there?
Their ESG vision is called Health for All, and it's structured around 3 pillars: A healthy society, a healthy institution, and a healthy planet.
Okay.
And importantly, it's not just like corporate fluff. They set some concrete, pretty ambitious targets. Shows a real commitment to sustainable and responsible healthcare.
Can you give us some specific examples? What are they aiming for?
Sure. Under a healthy society, they aim to train over 25,000 doctors, nurses, and paramedical staff by 2030.
Wow, that's a huge contribution to the workforce.
Massive. They also want to bridge care gaps by doing over 5,000 bone marrow transplants by 2030 and provide 3,400 free pediatric heart procedures annually. That speaks volumes about their social impact focus.
Absolutely. And the planet pillar.
For a healthy planet, they're targeting a 50% renewable energy mix by 2030, and the big goal is to become carbon neutral by 2040.
Carbon neutral by 2040.
Ambitious. Very. They also want to cut paper use across patient interactions by 30% from 2023 levels, aiming for that by 2026. These targets are not just commendable, they align with what investors increasingly expect, and honestly can lead to operational savings too.
Okay, let's shift gears now to corporate governance. What were the key strategic decisions made by their board of directors recently on August 1st? Anything impacting their financial future?
Well, they formally approved the Q1 FY26 results we've been discussing. But more strategically, they decided to ask shareholders for approval via a special resolution to issue debt securities.
Meaning taking on more borrowing.
Essentially, yes. Things like non-convertible debentures, NCDs, they want the ability to raise up to 2,500 crores in a financial year through private placement.
And why is that significant?
This revised higher limit is quite significant because it gives them substantial financial flexibility for future capital needs for that expansion we talked about, without needing to go back to shareholders every single time they want to raise funds this way. It smooths the path for growth financing.
Got it. Were there any notable changes in their corporate structure? Mergers, partnerships, that kind of thing?
Yes, a few key movements there. There's a scheme of arrangement for merging one of their subsidiaries, Meridian Medical Research and Hospital Ltd., MMRHL, into the main company. The board approved this back in November 2024. The stock exchanges gave their no observation letters in June this year, and now they're filing it with the National Company Law Tribunal. So that's moving forward to streamline the structure.
Okay. And I noticed a mention of discontinued operations. What's that about?
Right. That refers to Narayana Hrudayalaya Specialty Hospitals Private Limited, or NVD. It's a wholly owned subsidiary. They've entered an agreement to transfer the operations and management of that hospital to the Sri Mata Vaishno Devi Charitable Society, starting from April 1st, 2026, or maybe later.
So they're essentially handing it over.
Effectively, yes. And because of that, NVD's operations are now classified as discontinued. It suggests a strategic decision, maybe exiting or divesting an asset that wasn't core or perhaps less profitable, letting them focus resources elsewhere.
Makes sense. Any new ventures or alliances announced? Things that could open up new markets or services?
Yes, quite an exciting one, actually. Health City Cayman Islands Limited, that's their subsidiary there, has entered into a joint venture agreement.
With whom?
With a few players. 2070 Health Inc., W Health Ventures GP LLC, and Everhope Oncology Private Limited. And the aim? To establish and operate a network of cancer treatment centers back in India, specifically focusing on chemotherapy services.
Expanding significantly into oncology in India through a JV.
Exactly. It's a crucial expansion into a high-demand, growing area of healthcare. And using partnerships is a smart way to accelerate entry and share expertise.
Okay, let's round out this corporate picture by looking at ownership. Who holds the shares in Narayana Hrudayalaya? What does the pattern tell us?
As of June 30th, the promoter group, that's the founders, key management, holds the largest share by far, at 63.9%.
So strong insider confidence and control.
Very much so. Then you have a diverse group labeled Others, holding 15.5%. FIIs, foreign institutional investors, hold a significant 10.5%. DIIs, domestic institutional investors, hold 9.5%. And there's also an ESOP trust holding 0.7%. That typically manages shares for employee stock plans, aligning incentives.
Right. And can you name some of the big institutional players who are invested?
Sure. Among the key domestic institutional investors, you see well-known names like Nippon Life India Asset Management and SBI Life Insurance.
Okay.
And on the foreign institutional investor side, big global players are involved. Think Vanguard Index Funds, Franklin Templeton Investment Funds, and the government pension fund, Global Norway's Sovereign Wealth Fund.
Having those kinds of names on board must be a good signal.
Absolutely. The presence of such large, diverse institutional investors, both Indian and international, signals strong confidence in the professional investment community in Narayana Hrudayalaya's growth story and their long-term prospects.
So wrapping this up, what we've really unpacked today is a healthcare provider that's, well, not just growing its top line impressively, but is also very strategically investing in future capacity. Big expansion plans. They're leveraging digital tech to boost efficiency, building out these integrated care models, which promise new revenue and deeper patient connections, and all while keeping their finances incredibly healthy with very little debt.
Indeed. And you add to that the commitment to clinical excellence, those groundbreaking procedures we talked about, plus strategic partnerships like that new oncology GV,
Yeah.
and the really ambitious ESG targets. It paints a picture of a company with a very robust, clear, long-term vision. They're definitely thinking beyond just the next quarter's profits, looking towards sustainable growth and societal impact.
Yeah, what really stands out, I think, from this deep dive is how they're navigating the sheer complexity of modern healthcare. They seem to be successfully blending the traditional hospital services with these newer digital health initiatives, and that comprehensive integrated care approach. It feels quite holistic.
It does. And it really raises an important question, doesn't it? As healthcare systems everywhere continue to evolve, are these integrated care models and digital innovations going to become the absolute primary drivers? Not just for financial success, but for broader societal health impact too.
Hmm.
And if that's the case, how might this reshape the patient experience access to care,
Mm-hmm.
in the coming years? Not just for a leader like Narayana Hrudayalaya, but really for the entire sector globally.
That's definitely something profound to mull over as you continue your journey to being well informed. Thank you so much for joining us for this deep dive. Until next time.